Cipla is the top Nifty gainer, rallies more than 8% after the US FDA classifies its Goa facility as voluntary action indicated, paving the way for key niche drug launches.
LMT is up more than 5% after reporting a good set of numbers. The second quarter revenue, EBITDA and profit come above estimates. The management tells CNBC-TV18 that they stick to their guidance for FY25.
Manappuram Finance slips more than 3% after Asirvad Microfinance. Profit declines 36% and asset quality deteriorates in the second quarter.
IRB Infra slides 1% on the back of a weak showing the second quarter. The revenue declines 9% on a year-on-year basis. The management tells CNBC-TV18 that quarter 2 was impacted by monsoon and they should be able to deliver as per their earlier guidance going ahead.
Biocon too slips after missing estimates in the second quarter. The company sees weak performance from generics and Syngene.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam, and happy Diwali to you as well as your family. Celebrations are on here in the studio as well, and hopefully the markets participate, Mangalam, at some point of time.
At some point of time, hopefully the markets participate. But, you know, some Diwalis bulls celebrate, some Diwalis bears celebrate. Indeed. The short point is that everyone celebrates. We celebrate every day. No buy side, sell side. We're on the ring side. And that's what we get for you every time. Good corporate conversations and a lot of wishes from Team CNBC-TV18 for you and your loved ones. So let's go straight into the first management that we've lined up for you on the show today. Aeroflex, that's the one that registered a 16% revenue growth in the second quarter. Slightly lower than the guided revenue of 25% for the entire year. The margin, however, expanded while the company is also onboarding new capacities in December 2024 itself. So, to tell us about everything that is happening and likely to happen, we have with us Asad Daud, who is the managing director at the company, joining in. Thanks a lot, Asad, for joining in. 25% is what you guided for, 16% is what you've done. Do you still hold on to that 25% guidance, especially with the capacities coming in on December?
Yes, sir. So first of all, a very happy Diwali to you, to all your viewers, and also to all the investors. So yes, in terms of our guidance, so we are looking at a growth of 25% for the entire year, especially in terms of our profit margins, and I'm sure we'll be able to surpass our growth in terms of the profit. In terms of the revenue, we are looking at a growth of about 20 to 25%. Especially on account of the increase in the capacities that we have already commissioned and will be commissioning in this quarter.
So just to clarify, 20 to 25% is the revenue band that you've given, revenue growth band, and profit growth will be upwards of 25%, right?
5%, yes, that's right. That's correct.
All right.
Okay, all right. Hi, Asad, and good to see you in. It's been a long while since we chatted. Well, give us a few more details then. You know, what's the outlook on the working capital cycle? There appears there was a couple of pockets that got stretched. So how do you see this panning out?
Yes. Hi, Nigel. Yes, the working capital in the last 6 months actually have got stretched a bit. This is purely on account of the Red Sea crisis. So a lot of shipments have been delayed. A lot of the vessels have been skipped. So that has lead to increase in the requirement for working capital. I guess for the next couple of quarters, it would remain high. But I think hopefully from the next financial year onwards, I think we'll be able to see some reduction in the working capital cycle. So let's see. Right.
Okay. Some improvement is what you see in the next year. But what about, the margins? You said 20 to 25% would be the revenue growth. Net profit would be 25%. If your revenue grows by 20%, then obviously there is margin expansion that you're building in. But in case your revenue grows 25%, then are you likely to see margins at around that 20.5% itself, which you've done in the first half? Or do you expect it to go to your earlier guided band of 24-25%? By when?
So if you see that in the first half of this year, our EBITDA margin has increased by almost 100 basis points. And we are looking at 24 to 25% EBITDA margins over the next 3 to 4 years. So on an average basis, if you see, it will be like about 100 basis point increase in the margins every year. And obviously with the increase in the top line, plus with regards to the new capacity and the new products that we have lined up, I'm sure that we'll be able to achieve our targets of the profit margins.
Asad, a couple of questions here. One is in terms of the inorganic opportunities. You briefly mentioned about that you're on the prowl. Anything we should hear about in the coming quarter, second half of this fiscal? That's point number one. And in your export mix, are you seeing pressures in terms of demand? Because the talk is that the globe is slowing down, though there are various geographies that are still doing very, very well.
So in terms of the inorganic acquisitions, we have already completed one in the at the start of this financial year. We acquired a company called High Engineering, which is into the fittings business. We are also in talks with a few companies for potential strategic investments. Obviously, it is at an extremely early stage, so would we only be able to comment once anything materializes. With regards to the demand, so yes, some regions of the world are slowing, especially in terms of Europe. But our focus has been over the past 2 to 3 years to focus aggressively on the Middle East and also in the USA market. So hence you see that now almost 57% of our total exports is to the America region. So hence the European is down, but the US region is going pretty good.
That's interesting because we have a lot of imponderables from the US as well in the next month itself. We have the elections and a lot of developments out there. Just wanted to know on the metal bellows business itself. Your capacity in December is coming in on metal bellows 120,000 pieces at a peak utilization when both the phases are completed. What could the revenue potential be here? And have you locked in on any clients already? Because I remember you were saying that you were in talks with a couple of them.
So yes, so hopefully in this quarter we will start with the trial production for the bellows, and the commercial production would follow after that. We have already started the discussion with our existing customers with regards to the bellows. Our design team has already started working on the design of the bellows. And with regards to the two phases of the bellows, so right now we are completing phase one of the bellows. So at a peak capacity, we would be reaching a turnover of about 80 to 90 crores from the bellows division itself.
That's in the first phase?
That's in the first phase, yeah.
And second phase obviously would be a little more than that, about 120, right?
Yes, so a total would be about 200 crores after both the phases are commercialized and into full-fledged
and what margins do these bellows give?
They generally give margins, in terms of the EBITDA margins in the range of 25 to 30%.
All right, take that point. Thank you so much, Asad, for joining in. Higher margin businesses coming in on stream on December. You are hoping for 20 to 25% revenue growth with 100 basis points margin improvement. Wish you good luck for this year, more importantly for the next year, as exports hopefully pick up as well and the outlook on the globe improves. With that, we'll get you an idea for profit coming from our colleagues at Money Control Pro. Today we have Madhu Zinda joining in with a stock that she's been tracking.
We are talking about Wipro that had a decent Q2 FY25 performance on the back of steady execution. Company's IT services revenue grew by a sequential 0.6% after 6 consecutive quarters of decline. In a clear sign that discretionary demand is making a comeback, the company's consulting arm Capco actually did well in the quarter. Thanks to an improvement in operating efficiency, which could negate the impact of 1 month of wage hike, the company succeeded in reporting a sequential improvement in its operating margin. While the near-term guidance remains a dampener, it gets partially countered by the strong commentary on medium-term growth outlook. Wipro further deepened its top account relationship in the quarter. Deal flow was healthy with a sequential growth of 9%, and the company also saw traction in large deals. Wipro saw net addition to its headcount for the second consecutive quarter, which is also reassuring. The valuation discount of Wipro with large peers might narrow should demand environment improve and the company executes steadily under the new leadership.
All right, Madhu, thank you for that. With that, we'll step into a short break. Come back on the other side. We'll have the management of Maharashtra Seamless. Kaushal Bengani joins in.
Welcome back. Well, let's focus on Maharashtra Seamless. The numbers in the second quarter were in improved performance in comparison to the first quarter. On a year-on-year basis, it's still a little bit softish. Let's understand a couple of details then. We're joined by Mr. Kaushal, who is the Deputy General Manager of the company. Hi, Kaushal. Good morning. Wishing you, your team, your family a very, very happy Diwali.
Happy Diwali, Nigel. Thank you for inviting.
Lovely. Let's get straight to business then. The EBITDA per ton of the Seamless division has improved. If I look at it on a sequential basis as well, it's shown a good improvement. Now, the first quarter was marked because of inventory losses. Were there some inventory gains in the second quarter? Point number one. On a steady state basis, what should the Seamless as well as ERW EBITDA per ton look like?
On the Seamless front, there were two factors which impacted us disproportionately in the first quarter. We had communicated earlier that those factors will normalize in the second and third quarter of this financial year. We've seen normalization in the second quarter. There were inventory markdown reversals in the second quarter on the Seamless front, and as also was the dispatches of high value orders, which could not take place in the first quarter, which affected the EBITDA in the first quarter disproportionately. That disproportionate effect has reversed itself in the second quarter, and the reversal is partial in nature. We expect that reversal to continue into the third quarter as those orders are not yet fully executed as per the dispatch plan of the customer.
Okay. What will
on the
mean
ERW front, we believe
Kaushal,
that...
if you could give us, Kaushal, sorry to come in, but on an EBITDA per ton, what should it look like on a steady state basis? The Seamless business as an ERW. Yeah, go ahead.
Okay. On the steady state run rate would be around 15,000 rupees per ton, which we had guided earlier. I think it was met with a significant amount of shock when this guidance was given earlier, because earlier we were doing much higher levels of EBITDA, but that was more on account of macroeconomic factors rather than anything else. We think going forward on a medium-term basis and going into the next quarters, 15,000 rupees per ton is a reasonable figure. On
15,000 rupees. All right. And on ERW?
On ERW, generally the EBITDA ranges between 4,000 to 9,000 rupees per ton. The reason for this variation is the product mix, because pipes in the ERW segment are further subdivided into two categories, the oil segment and the water segment. When dispatches in the oil segment are higher, EBITDA is higher.
Right. On the EBITDA itself, I just wanted to know, in terms of your clients, ONGC and oil, their proportion in your overall order book has come down. I'm given to understand that they are better margin businesses for you. What's the plan out here? What's the prognosis? Are you expecting some orders from them?
Yes, we are. We are getting regular orders from them. It is more of a timing difference, the way the order book is reported, because certain orders are under negotiation, certain tenders are in the process of being completed, certain tenders are in the process of being issued. But we should also consider that in the second quarter, dispatches of Oil India and ONGC related products were higher than they were in the first quarter, because bear in mind that in the first quarter, we were not able to dispatch the higher value orders of one of our customers, which ended up causing the EBITDA levels that they did in the first quarter.
So what quantum of orders do you expect from ONGC and oil in the next couple of quarters?
We would not want to give out a breakup of the customer mix, but what we would want to say is that we maintain a 3 to 4 month order book in the past so many years, and we want to continue doing that going forward. The reason why we maintain a 3 to 4 month order book is because we earmark our order book with inventory, so that our margins on a medium term basis are locked in and we are not impacted by fluctuating steel prices on a medium term.
Got it. All right. The rig business now, it's a very small part of your business. The EBITDA contribution has moved up from 12 crores in the first quarter to around 20 crores in the second quarter. So what kind of a quarterly run rate we should look at in terms of an EBITDA? Point number one. And sub-point of the same point is the rigs business could get a good buyer because of the rigs rates being revised upwards. And I think in the past, the street as well has flirted with the idea that you all could potentially do that. Any plans?
EBITDA on the rig business will more or less remain the same going forward because day rate has not changed. It's mainly a function of the costs that are booked into the P&L in any relevant quarter. So we would estimate around 45 to 55 crores would be the annual EBITDA from the rig segment. In the past, management has taken a view that we want to exit from this business because this is not core to Maharashtra Seamless. We do want to do that, but the proposal has not yet been put up with the board because the contract for the rig is till May 2025. Once we near the date of contract completion, we'll put it up and as per the approvals, necessary communication will be issued.
So just a follow up to that, because the contracts are all the way up to May 2025, once they are renegotiated, how much higher can they be repriced?
Currently, the last rig which was deployed with ONGC was at $88,000 per day. However, rig rates have since fallen. So we would estimate that for modeling purposes, one should take a rate between $65,000 to $75,000 per day.
Versus your locked-in rate would be what right now?
Our locked-in rate is $23,000, which is paid to us by the drilling contractor. The drilling contractor gets $38,600 from ONGC.
So 3x from here is what it can do in terms of the repricing. And with all costs remaining same, the EBITDA of this business can intuitively just triple if, everything else remains the same and the prices are negotiated upwards. Just trying to understand that.
I'll just correct you on that because the rates would rather double instead of triple because 38,000 is the rate received by the drilling contractor from ONGC, which would go up to 75,000 levels. So okay. Yes, EBITDA is likely to double on the rig front if we decide to continue with the rig. If we decide to exit the rig, then there will be larger impacts.
So drilling contractor receives 38,000 and you receive around 23,000.
From the drilling contractor, that is correct.
Got it. Got it. All right. What valuation should we give this in case you want to sell it? I mean, what is it? 10 times EBITDA, 8 times EBITDA?
I think you are a better judge for that. We won't be able to comment.
I'm the judge, but you're running the business.
Yeah, and you're the one who's going to sell it, right? So you're the one who will receive the money. There will be buyers. So irrespective of what multiple both of us put out here, it has to be a deal between you and the buyer, right? Typically, what is the multiple?
That is correct, but that working has not yet been done, so it will be too early to comment.
Okay, all right. But you're still sitting on a sizable amount of cash. If this goes, you'll be sitting on even more cash. Now, if I pull up the stock price, the stock has corrected sharply from the recent peak. Is there a possibility your shareholders would be interested to know what you're going to do with this cash? One time big dividend could come out. Maybe you do a buyback, which you'll have done in the past. Your view?
On the cash front, we have quadrupled the dividend which we paid out for FY24 from the levels that it was at FY22. Going forward, dividend is a way to distribute cash to shareholders. So is buyback, considering the new guidelines, because the impact of dividend or buyback is similar on shareholders from a taxation perspective. Therefore, both proposals can be considered, but nothing is on the cards right now. Whenever suitable approvals are received from the board, we'll let you know. But nothing is on the cards right now. The reason why we are keeping cash is because we have a capex of 852 crores, which we had announced some time ago, which we are working upon. Secondly, please bear in mind that the plant and machinery which we are operating is quite old. There will come a point in future where we'll have to replace the plant and machinery with absolutely new machinery because old machines are no longer available as they were available 20, 30 years ago.
Right.
When that happens, the replacement cost being prohibitive, and that is the reason we are able to maintain our market leadership position, we'll use the cash for replacement of plant and machinery.
Point taken. Thank you so much. Right.
Thank you.
Thank you so much for joining in, Kaushal, for giving us the details on your business and outlook on the EBITDA per ton across your verticals. Some more orders coming in the next couple of quarters. But most importantly, everyone will be looking at whether the rigs business gets sold or not. For now, from Nigel and me, we'll wrap up on this edition of Chartbusters with the news that there has been no respite in selling in the market. In fact, the Nifty is down by almost 100 points. We'll leave it to the team of Trading Hour to take the markets forward.